Hello, welcome to Any Answers, where Tim and I have a look at a couple of questions on the accountingWEB Any Answers section, and we try and either answer them or have a look through some of the answers already offered. Our first question this month comes from, well, possibly Taxi Boy. We quite like the idea it's a new Apple device, so Tax iBoy. And Tax iBoy has asked us a question relating to trading losses. He has a client who has trading losses as a sole trading proper trading business, he specifies, earns about £50,000, trading losses of about £50,000 as well. Can he offset the loss in his tax year and still pay, well, he says £50,000 gross pension contribution and get tax relief? The point is, when working out whether we have enough relevant income to pay a contribution to our pension, do we knock the losses off?
Well, it's an interesting question, and the answers refer back to the old regime where the maximum pension contribution was a percentage of your net relevant earnings. But under the post-April 2006 pensions regime, the concept of net relevant earnings has been replaced by relevant UK earnings. And relevant UK earnings are earned income before the deduction of any losses. And so if, as in the query, you've got employment income of 50,000, but that is completely covered by losses in a sole trade of 50,000 or more, you would have had zero net relevant earnings and not been able to get tax relief on a pension contribution under the pre-2006 rules, but you've got 50,000 of relevant UK earnings, and so yes, you are able to pay a pension contribution of up to 50,000 subject to your annual allowance. The ordinary annual allowance is 40,000, but it could well be that Tax iBoy's client has got brought forward annual allowance, and so the conclusion is that yes, you would be able to pay that full 50,000.
Fantastic. The other question this month relates to IR35. It is of absolutely no surprise that we've been asked a question relating to IR35 because it is very, very controversial area. It is something that is extremely difficult at the moment. We have just moved across to the new rules. Public sector bodies galore will be enforcing the new rules as we speak. And the question we've been asked relates to somebody in the NHS and whether or not an umbrella company is the thing that we're going to consider using. And in fact, rather than consider using, Tim, the questioner here has said, do I have to pursue this umbrella company structure?
Yes, there are two or three or more threads on accountingWEB about the public sector body IR35 rules, not surprisingly. This one comes from the contributor Gone Sailing, and actually doesn't mention the NHS, but what Gone Sailing tells us is that one of their clients has told the accountant that they're going to close down their personal service company and go into an umbrella company. In other words, become a director shareholder along with other director shareholders, maybe a dozen, maybe a couple of dozen, however many, in this umbrella company, and that company will then provide their services to the public sector body. And the limited company is going to be caught by this new public sector body legislation, and apparently it is the public sector body that has said we're not going to pay any personal service companies directly, and that'll be because the PSB doesn't want to have the obligation to operate PAY and NI, and they've said to their contractors, you must go into an umbrella company, and the reason for that is that the public sector body will then be able to avoid the new regime and pay the umbrella company gross. But the umbrella company will then itself have to operate IR35 and or the PAYE public sector body rules. And the question, how is it possible that the umbrella arrangement will allow them to claim travel and subsistence? And what the client has told the accountant is that their current deductions for travel and subsistence payments, because they take the view that they're not within IR35, will continue through the umbrella company, whereas the accountant, or Gone Sailing, is querying that. J. Cresswell Tax makes, I think, the most notable contribution here. Let me get this straight. Your client's been told by the public sector body that they're caught by IR35, so they've decided to move to an umbrella company, fair enough so far. However, then being told that he can claim travel expenses as he isn't subject to supervision, direction and control. Well, the SDC rules came in last year and tightened up the exploitation of personal service companies by claiming travel and subsistence. But as Jay Cresswell Tax points out, so he's caught by IR35, but not by SDC, which are actually stricter tests. And I agree with her. And she says, what a load of ... And then Gone Sailing says, well, actually, the travel and subsistence would be for travelling between sites rather than home to work travel. So that muddies the water a bit. But, you know, there are one or two other contributions. Jules 1234 makes the most interesting one about the Class 1 secondary, because under the current arrangements, where you've got the public sector body paying an agent, paying a personal service company, then if it's within IR35, the Class 1 secondary would be paid by the agency, whereas if it's an umbrella company arrangement, the Class 1 secondary is paid effectively by the umbrella company, and hence the burden falls on the worker.
So Giles works for Giles Limited, works for the BBC.
Yeah.
The BBC has to decide whether Giles Limited is guilty of IR35 or not, and would tax Giles, me, as an employee effectively. I would still be separate, I would still be a personal service company.
But you go through the BBC payroll.
But I would go through the BBC payroll. However, a lot of public sector bodies are saying, if you set up an umbrella company, then we're more than happy to give you work. We don't really want to be messing around with individual companies, but we will work with you if it's an umbrella company. People are saying, fantastic, this solves all my problems. It doesn't, because first of all, you will be viewed as an employee of the umbrella company for this to work. And secondly, if it is an umbrella company where you are effectively part owner of that business, of course, all the costs you're still going to pay. So the 13.8% employer's NI, you still have to pick up because it's coming out the cost of your business. If you work for an agency, they have to pick up the 13.8%, but presumably will arrange their fee structure to make sure you end up with the net figure anyway. The travel and subsistence point is the standard rule. If you are working for somebody else and they have any sort of control over you, then it will be taxed. You would not get tax relief on their travel and subsistence.
Not exempt.
But as ever, if as part of normal employment rules, you're travelling to temporary workplaces whilst at work, then that would be allowable.
Correct.
That's the distinctions that we need to draw. It is a minefield at the moment for all people involved in with any clients in IR35. As Tim has said, some people watching this will inevitably lose clients as they decide to go for the umbrella option or just become an employee. Some public sector bodies are employing huge numbers of people at the moment in an attempt to avoid the whole issue. But of course, that means they don't need the personal service company anymore. For other people, I think most important is keeping a track of exactly how much work your clients are doing through their PSC and making sure that the overall tax liability is as accurate as you can get it. It will be very hard, I think, for the next couple of years as new contracts start and as people work through it. On Tax TV this month, Tim and I discuss IR35 a lot more. Tim has an extraordinary example relating to Crossrail, which is quite useful as well, I think. Do watch Tax TV this month. But as far as Any Answers is concerned, hopefully we've answered your questions. Do remember to add your questions in the future, and perhaps next month we'll discuss yours. But for this month, bye-bye.